All right, everyone. Welcome again to another Sunday night charting. We're just going to get right into this. I do want to speak on the fact that we do have CPI this week on Wednesday. Earnings week, not many major companies. I think the biggest one I saw personally was Delta, and that's going to be Thursday pre-market. So travel stocks may have some indecision this week after a massive push the last two. But we're just going to get right into this. I'm going to work my way down through top to bottom, clicking on major stocks that I think people want to see. And if you guys have anything else you want to see or hear about, just let me know. And Habibi, you said 1 hour, 30 days. I'm just on the 1 hour right now. So as we chart, I'm going to start on the 4 hour just to give the bigger picture. And we're just going to work our way down. I'm not really big on the whole 30-day, 60-day. I just do the time frame for the tickers. So we're going to start with Baba. And just so you guys know, we are going to focus on SPY last. I don't want to start with that right away. Let me clear all this stuff out. There we go. All right, guys. So starting with Baba, I know a lot of people have been mentioning this only because we pumped heavy on Friday. No one was really looking at the overall support zone we were holding until the move actually happened. Few people that I stay in contact with, they are swinging Baba from Friday open, so they are up pretty good with a few week expirations out. But going off the bigger picture for Baba, I'm going to switch to the daily chart real quick just to show you guys where we're currently trying to curl back to the upside. We had a major sell-off in this area on Baba, which broke the heavy support between about $74 and 79-ish. That was the main support that held. Now we're trying to push upside. So knowing that on a larger frame, I'm going to take this down to the 1 hour only because I want you guys to see the push that recently happened and the pushes from a few months ago that have also tapped out after a massive push. For those of you guys that may not know, there is I don't want to say a rumor, but news release is going off about how there is a huge buyback with Baba shares coming up this week that got cleared. And there's also repayment processing from the IPO release with CFO or CEO, someone major in the company buying back multi-million dollars worth of shares. So knowing that information, I'm pretty sure that's what made us pump. I know Yellen was over visiting with China with the tariffs this past week as well. So I'm feeling China stocks and the overall Chinese market should have a nice push this week. I know the United States market was going upside the last few months. China was kind of stagnant, not really doing much. So I personally think there may be a reversal coming. China starts to push, United States slowly sells off. Feds have been kind of hawkish. So we're going to see what Wednesday brings overall with the CPI. Focusing on Baba, we have the main gap fill at roughly $93 to $94 a share, currently floating around $91 after pushing $6 to $7 from Friday open to close. If you guys are looking for a pullback to get into calls outside of just chasing, focus on the area around roughly $89 a share. This is the main part that I'm looking for. I did not swing or enter Baba on Friday or Thursday. Like I was saying earlier, other people I know, they are already in swings that are up 50% for like 2 to 3 weeks out. So they're holding well with their position. If we do end up breaking the heavy resistance, which I see at roughly $93 to $94, I would not be surprised if we filled the gap to this highlight right above, just over $100 a share. There's going to be a lot of consolidation around 97, 98, but the continuation with Baba should give it that momentum to push up to $100. If we do see a rejection before the push happens, watch out for that $93 to $94 a share. And outside of the rejection for the downside now, like I was saying earlier, there's a nice support at roughly $88 to $89 that could hold on a slight retraction. The retraction based off the Friday push is only a $3 drop compared to the $7 to $8 push that happened on Friday. So don't think if we see a slight pullback on Baba, which I honestly think we should gap up in pre-market tomorrow, 2 to 3%. So don't be worried on a like quote unquote fake sell-off at open for Baba and it retracts to the upside again. I do expect something to happen with selling pressure, but I don't want to expect it and then just buy in blindly off of a sell-off. You want to look for a main zone. So like I was just saying, if we do gap up in pre-market to 2 to 3% green already, and we do open up at roughly $94 to $95 on Baba, look for a pullback to the close from Friday, which is roughly $91 to $91.50 a share. So I'm going to take this down to the 15-minute just to give you guys a closer up visual as to what I mean by that. So going off this little cup forming, this curl on the upside, heavy buying pressure on Friday, obviously. If we get that push pre-market to 94.95, I'm going to take away this highlight real quick. The push will be roughly around to this orange line. I do expect the pullback to be roughly around this area, which was the gap down and or the close from Friday, June 16th. We had the gap down over the weekend and the Tuesday since market was closed Monday. Watch out for that level if we do have a pullback, and I'll make this red. So if we do gap up pre-market tomorrow, watch a pullback to $91.50 area. If we don't gap up, watch for the pullback to roughly $88 to $89 a share on Baba. And let me zoom out this side. I want to look at NEO with you guys only because, like I was saying, China stocks, I do see having some momentum. So I do want to just show you guys what I've been looking at with NEO just to see if you guys enjoy what you see. Maybe you want to watch this. It is a very cheap stock for contracts right now. It is an electric vehicle stock, and it's also Chinese. So you have to realize with the double correlation of a possible push and NEO is curling, catching buying pressure from the previous lows where it opened up and IPO'd. We could see some upside just like Rivian has been showing these past few weeks, well, mostly the last few days, in my opinion. Looking at NEO on the daily, you can see we're slowly trying to get some momentum. I'm going to take this down to the 2-hour now just so we can see the next resistance coming up when we do have this run up. I do see NEO pushing, and as of now, we're holding trends of higher lows. Slight retraction we already had on Thursday and the Friday. Watch out for this push, which will bring us to a rejection zone of roughly $10.50 a share, $10.50. Looking at the break on $10.50, we will and very easily fill a gap to roughly $12. And I know you guys are thinking, what's a $1.50 push? That's not much. For a $10 stock, $1.50 on shares is an extremely high push in momentum. That's roughly 15% gains. So you have to realize contracts on this will be cheap. It's a low risk, high reward scenario. If this has a momentum push, volume picks up, and everything starts to move upside with it. Don't take out electric vehicles because Tesla's having pullbacks. Tesla's not showing strength like it did the last few months. Other stocks are showing strength in the electrical vehicle sector. We have Rivian, NEO, and we're also looking at Blink and Plug. Everything that involves electric vehicles, whether it's charging or just the cars, is showing momentum pushes. So looking for a pullback on NEO. For me personally, I've been telling people this as well, around $9.70, $9.50. Look for that strength hold. If you look at the historical analysis on this and the price action, before we broke above, there was multiple support zones at 9.7, 9.6 area. Once we got underneath, there was multiple rejections from resistance that kept this. Oh, geez. Come on, yellow highlight. Come on. There we go. Multiple rejections from resistance. We broke above, yes, but that's where the gap fill is. This break above showed the gap fill. We immediately sold off right back below $9.7 a share. So watch that to hold support now that we are currently above. We pulled back underneath, fake liquidity grab, shot back up to the upside. 9.7 will be a nice support for NEO. The gap fill, which is the PT1, the way I pronounce it, the price target 1, roughly $10.50. When we do break above that, I'm not saying if, because I truly believe NEO is on the come up for a massive move. I will not be surprised when we do touch roughly $12 a share in this area. And I will change this color to red just so it's a little bit more visual for you guys. So first PT, and if you want, I can actually type this in for you. Let's do PT1, and we'll change this color to orange just to match the other one. So we have PT1 at roughly $10.50 to $11 a share. And the next PT, which is the one that I truly feel is going to happen pretty soon on NEO, we're going to put this at roughly $12 a share, $12.50. The way that I look at this to happen, we're currently holding support at 9.7. If we do push up to this resistance, notice that we're making higher highs on the trend. And we're also squeezing on this rising wedge. Yes, a squeeze on an upside can pull back, so don't be scared of the retractions that may happen as we push the resistance, pull back to the trend, and then we may have that rocket takeoff to the PT2. Don't let pullback scare you out with the bigger picture. I understand a lot of people, they focus on the 5 minute, the 1 minute, and they see that pullback or the retraction. Focus on the idea of this is a buying point. This is a chance to get contracts cheaper for the upside, for calls. Don't let it freak you out. Don't chase the move. Wait for it to come back. If it does break out, like say the first arrow I put, it never has a pullback. We just send right to $12. You can chase, but understand the risk. Me personally, I would like to see that $10.50 resistance have a slight pullback to catch it at roughly $10 a share. You can buy it now, but it's the idea that we are at a rejection before the breakout. So 9.7, the main support to hold. If we do hold and push, first PT is roughly $10.50. Breaking $10.50, we will see a PT touch of $12 a share on NEO. I'm going to slowly work my way down. Let's look at PLTR. I'm trying to get some small caps in there for you guys that I've been looking at with a lot of my people I talk to. I'm going to go to the daily chart just to give this a visual for you guys. We talked about this last week, so I'm hoping you guys can see how important it is to really have like gap fills with the ideas of what can happen. So just looking at the main gaps, I talked to you guys about PLTR months ago about how holding the 750, holding $8 a share, a massive move was coming. I caught majority of this, and now we're at the next rejection zone, holding support. The PT was $14. We are holding that as a support now. We had a slight retraction, as you guys can tell, and we held. Now we're pushing back to the upside, getting some consolidation going. The next PT I have in mind, which is also the heavy sell-off historically that held and had a straight upside after that drop-off. People bought the dip. That is roughly $18 a share. I'm going to take this down to the 2 hour now, just so we can have this little cup in the, I may have to use the 4 hour. Let's go 3 hour, just so we can see. I don't use a 3 hour to trade, but I just want the visual in the picture for you guys. Understanding the breakout and the pullback. This is why I don't buy breakouts. We broke out consolidation for multiple days, back to back to back, heavy sell-off within 2 to 3 days. I wait for the recontest of the resistance break, which now should act as support, loading zone, ride it back up. We're still consolidating. So I would not be surprised as I zoom in on this, if we have one more pullback to keep these trends going. We're squeezing on the symmetrical triangle, sideways wedge, whatever you want to call it. Price action, in my opinion, is looking bullish only because we held support and our gap fill is around $18 a share. We have not filled the main gap. We came up close to it, but price action was stagnant. Very, very slow price action, heavy sell-off, which got bought up instantly. So for me, I'm looking at $18 for the gap fill. If I take this out to the 4 hour real quick, you can see exactly why I want that $18. Above 18, a lot of consolidation, but the next heavy gap fill is roughly $21 a share from the heavy support historically before we actually broke to the downside. This chart is looking very, very bullish for a few months of time. Don't get week of expiration expecting a huge move to make quick money. This is a timely move that has potential. Someone said back holding PLTR from $28. You may get 28 again, but it will take time. 3,700 KK. Be patient with it. If you want, you can use calls to your advantage to make money on the upside. Just don't buy calls blindly with 1 week out expiration. Understand this chart moves slow. When it has heavy consolidation like this, the move afterwards is massive. Notice all this consolidation. Massive move. Heavy consolidation, drop off, bought up. Heavy consolidation, sell off, held consolidation. We're on the move to the upside, making new levels. Level 1, level 2, level 3 is around 17. If we're looking at level 4, we're pushing up to that $20 a share, $21 a share level. Let's go to Lucid, only because I know Prodigy in the chat for Rippy Global, he's been looking at this very heavy. And also Lucid is another heavy stock that is being in the eyes because the Chinese base, it's also an electric vehicle sector. You have to understand rotation. EVs has been very hot. So when looking at the 4 hour with Lucid, the biggest thing I want you guys to focus on, we are slowly working to breaking these previous lower highs on these trends. We always push, reject. And I understand we're still making lower lows. This move could break out any moment, but you have to understand if we have a pullback on Lucid, this is when how I chart comes into play. Like me personally, I'm looking for a reversal on the bullish side. I'm going to change this color so it doesn't confuse you. And here's the arrows, which I love to use. A pullback. Why am I looking for a pullback around this area? The previous heavy resistance or support, heavy support here. If we pull this back, look where we're going. The correlation you want to use with historical analysis and price action. If we have a pullback on Lucid, watch around $6 a share, $6.50 a share. Use that confirmation. LCID's Saudi owned. Yeah. Lucid's the EV sector. My bad if I said China owned. But the idea of how Lucid, Neo, Plug, Blink, Tesla, Rivian, everything in that area is in the same sector rotation wise with the money filtration. So using Lucid as a pullback, watch this zone. And I'll put a level instead of the highlight just so it's a little bit more clear. 6.3 to 6.5 area. If we hold that as a support, we're making higher lows on the larger picture. Knowing that, this is when I'm looking for that breakout of this falling trend of lower highs. If we do break out, Lucid could be a problematic play. It's a small cap. I'm not sure how much short interest is on it, but I do know that it is higher than most stocks at this price range. Looking at the gap fill for Lucid, we've seen massive moves happen historically, but there's many gap fills that have to fill on this stock, on the larger picture. I'm not just looking at the historical like few months ago. I'm looking at the bigger picture. Focus on the fact of Lucid. This can easily break $9 a share. Going from $7.50 to $9, that is a massive move for a small stock. You can't look at this from a contract perspective. You have to look at it from a share perspective with growth per price move. $7.50 to $9, a $1.50 move on a stock, that's only $7.50. That is massive. If a squeeze does happen, even adding 2 to 3 months time on these contracts, they will move insanely for a good percent gain. It's also low risk because heavy consolidation will not kill the premium. When using this charting, I would like to see a pullback to $6.50, $6.20. If we do break out of this falling wedge on, say, Monday, Tuesday, whatever day this week, understand how to use lower highs for trends and reversals. I'm on the 2 hour now just to show you guys this smaller picture on the current price action. Each of these previous lower highs are going to be used as levels. They're going to be rejections. They're going to be key points to use. If we break out of this zone, I'm going to take away these arrows to the downside and use them to the upside now for you guys. If Lucid breaks out with no pullback, we're going to hit this zone as a rejection and pull back to the trend, which is also the previous zone right here. And I'll make this yellow just so it's a little bit more appealing. It's the idea of using historical price action in the current movement. As we make bullish trends from the previous bearish trends, we have to have a reversal. So as the price action shows that and has momentum to give you a visual, use that to your advantage. None of this is going to happen dead on. It's just the idea of knowing how to use it and how to understand it. Historical rejections will be used as the price action goes back to those zones. So if Lucid has the buying pressure, the buying power, people are focused on it, and we start to break out of the price action consolidation, aka this falling wedge, realize the zones that will come with it. Everything correlates and everything will reoccur. If we break out of the $7.50, there should be a slight rejection around $8. If we break $8 a share, $9 will be coming relatively quick. After $9, we have the actual gap to the upside to roughly $10 to $10.50 a share, which will be around this area right here. And I'll make this, let's go green. Lucid is setting up. Don't take your eyes off it because, oh, it's only $7 a share. Focus on the move that can happen. Add time. Trust the fact this chart is on the come up. Yes, it may take a while. That's why you add time. Don't try and catch this the week of. Don't play $9 call strikes in the same week expiration. $1.50 move on a stock like this is possible, but it's not likely to happen. We have not done meta yet. I'm slowly working my way down the list here and just choosing ones that are most important. So you got here in good time, I would say. So I'm gonna scroll down. Someone said AI, so let's pull this up real quick. I know 3700 will want this. So looking at AI, I'm gonna go to the 4 hour only because I want you guys to see the bigger picture before we break this down in the current time frames. And I'm also gonna delete most of these levels just to start fresh with you guys. So using AI, the first thing you guys need to realize, rejection zones on the downside. Yes, it's a massive sell-off, but you have to understand where the zones are on the bigger picture. So I'm going to turn this yellow to red just so it shows basically a support slash like death level, I would say. As we're looking at the current times now, I'm going to put a level real quick right here. If you guys can tell, this was a main support before we had the sell-off, which we're trying to push back up to the upside now, roughly $43 to $44 a share. I'm going to make this color orange slash yellow, and I'm going to take this down to the 30-minute now. Looking at the smaller picture, the biggest thing I want you guys to see, and also I'll take consideration, if you guys have any ideas or thoughts, please put it out there. I'm looking back every once in a while just to see what you guys are typing. AI ripped and then fuzzled out Friday, PLTR held. Yeah, so looking at AI, understand we're in a bullish trend currently. Overall, we're still making lowers. Yes, this line can come down, go up, whatever. Until we break the previous high, which is this highlight right here, we are still large frame-wise bearish. We're trying to gain momentum on the smaller, but going back to the 4 hour, we're still rejecting what held as support, $43 to $44 a share. Until we break to the upside, there's a lot of resistance in the way of this stock to move higher. Focusing on the movement that's been pushing upside for about the last week and a half or so, we have a new support. We can put it around here. Now, why did I put this here? Let me change this color to green just so it doesn't confuse you guys with the one above. The reason that matches, hang on. Let's just go bluish, that's better. Okay, understanding the hidden support, the hidden price actions. You can't just put levels everywhere you see them. We closed right at a historical rejection level, but there's a lot of gaps that pushed right up and right underneath when these came into play. So you have to use previous higher lows that form these trends. Let me put all these colors in real quick. You have to understand price action. You can't just look at the chart, oh, we're going up, we have to get calls. Understand pullbacks are going to happen. Where is the bounce going to hit? If this trend breaks that I'm moving right now, we have a support at roughly $37.50 area. Understand on the smaller frames, it's going to look like a sell-off. It's going to look insanely bearish, but we held that on a massive sell-off before. When we've had massive sell-offs, that zone has held. Yes, we broke underneath, but look, it took almost 2 days to get that selling pressure. Now that we're above, notice how we pulled back to the highlight I'm moving right now. The buying pressure hit that and it shot it right back up. So we understand buyers are now present and we're above that price action of $37 and roughly 50 cents. We're holding trends of higher lows. We're also currently making higher highs in the process. If AI can break out, there is not much holding this back once $44 a share is broken. Straight gap fill to $47 to $48. If we break that with continuation, strength and volume, buying pressure, we can push to that 47, have a slight retraction to show strength at that $44 a share area. This will not be a straight breakout like what happened back here. The idea of this happening is very unrealistic, but it can possibly go in that direction. You just have to understand you can't risk a position with week of expiration of a 50 call or a $45 call. The movement may not push that quick. So focus on low risk, high reward. With time, AI looks strong. Until $37 breaks on the downside and holds as a resistance, we are currently in a bullish trend on the smaller frames. For the larger frame, we have to break $44 a share. Every time we come to $44, we've rejected, shot right above, but we come right back down under. Broke above before, came right back down under. When we do break above 44, that $47 a share area is that tap out for the shares. So we have to use that to our advantage. Why would you want to get a 50 call for a 1 to 2 week out when it takes multiple days to gain that trend line, to gain that momentum to the upside? You can't put yourself in a position to hope for that breakout. You have to understand, okay, a slight pullback, I can get calls short term, ride it back up to the trend. Everything with price action for AI has been almost dead on. Every sell off pulls back to $30 a share. I told you guys a few weeks ago, every pullback to $30 a share is going to be bought up. We didn't hit that in this area right here. Crap, come on. There we go. We didn't hit 30 on a pullback before these trends start on the upside with the rising wedge, but it shows you support is rising with the stock. Every pullback is having a higher low. So there's nothing bearish about this right now until we break $37 a share. If we do pull back, watch that as support. The push to the upside, first PT is roughly $44. We could see a rejection. I'm not saying we're going to rocket through 44 and touch 47, 48. There should be a lot of selling pressure for the people that did buy the dip at roughly $32 to $33. If we break 44, resistance is heavy at 48. Going back to the 4 hour, breaking $48 a share, you can easily see where the next resistance will be from historical movement, roughly $50 to $51. Play this like very closely, understand the smaller time frames and what the potential does have for this stock. AI as a sector, not just the stock, but as a sector, is still showing strength because of tech, chips, anything that involves artificial intelligence. And it's falling channel at the last quarter just finished. Money might be moving out of AI possibly. That is a good indication. Knowing that every time we push, we have a sell off, we're still holding higher lows on the frames. So until we have indication of a sell off, AI is still gaining traction, but how much short interest is in there? You have to understand from a different perspective that we can't see how many people are keeping this down and not just buying the dips. We can't really incorporate that into our judgment. So we have to use basically chart and price action to really gain our conviction as to what we should do on sell-offs, on pushes. Should we trim? Should we sell? Should we start a position? Using the main levels that I personally have right now, I think would be best. If you want to play it like extremely safe, wait and see if we do have that massive drop off. I'm not saying we will, but that is the safest chance you have to get calls. Everything else, obviously, every trade is risky, but using $37 a share, that will be a massive support in my eyes. If we do push upside, resistance 1 at $44 a share, the main resistance before the gap fill to $50 to $52 will be $47 to $48. Yeah, AI is extremely juiced right now. All contracts are priced high because it makes retail that chases, they don't want to play the stock, and it forces them to buy out $10 a share. Like instead of playing the 40 calls, they understand, oh, this is cheap. AI is hyped. It's a meme stock. Retail will get 50 calls based off if this goes, if it moves high, the hope of it going could happen. That's why they overprice certain stuff. If you notice when FOMC week happens or CPI, SPX and SPY contracts are way higher priced because people expect a major move. It forces them to buy out of the money a lot more, 10 to 20 slots half the time. So that's one thing to put into consideration. I'm going to pull up Netflix for you guys. I'm just slowly going down my list right here. I want you guys just to say anything. I did see you guys talk about Meta, Microsoft, and a few other stocks, Tesla, SPX. We are getting to those. They're at the bottom of my list. I'm just working top to bottom. We still have 30 minutes, so don't freak out if I don't cover everything. I will stay until we cover it all. Don't worry. So Netflix will be a very, very short explanation. For you guys that have been here for a few months now, you know I've been talking about that 450 gap fill on Netflix, and outside the 450, we have a gap at roughly 475. So let me put those quick lows in. Come on, move down for me. There you go. And then the main gap I was telling you guys about was roughly, there we go. I'm going to change these colors real quick. There we go. So going off the historical movement, you saw all this consolidation on Netflix. You have to understand all this movement leading up to it. When are they going to sell? Are they still holding? these shareholders filled the gap just like Meta. We'll get to Meta very soon, but it's the same setup. Earnings sell off, we fill the gap to the upside again. How much more room does Netflix have to push with all this consolidation of price action leading up to where we are right now? Going down to the 30-minute, looking at the smaller picture for Netflix. We're trying to curl. We're still making higher lows, if you guys can't tell. Still making higher lows, still showing strength in a bullish transition, but notice what we're doing with the squeeze. If we look at the 450 or 452, 448, whatever level you want to use as a rejection, we are squeezing on Netflix. Where's the price action going? Up or down, up or down? That is the question right now. If we do push, there's a massive gap to 475 area, 470 to 480. That is what we're going to fill. All this nonsense in between is easily going to get covered with Netflix. Maybe a few sell-offs of like $5 down, 15 back up. But the zone to fill is going to be a very simple transition for the stock. If you guys don't know already, I am pretty familiar with how this stock moves. And now that we're at this transition of a rejection, could we have a slight retraction to break the current trends on the smaller frame and trick retail into thinking that we're going to sell off, even though we could just have a straight drop to roughly 410 to 415 a share just to push the price right back up again? Anything is possible with Netflix being this high up. There's no exact guess as to what could happen. So you have to take this with a grain of salt. Play it very carefully, catch the dips, and use historical supports and or previous higher lows based off trends to use as your entry zones. If we break 450, I do see us pushing to 475. Outside of that, there's not much to really talk about. Going down to the 15-minute, if you guys want a smaller time frame for a call area that has to hold its support, focus on that 430 area. A lot of wicks, yes, they didn't fill completely. 432, 431, a dip down to 427, 426 area. If you want to know how I have patience with waiting for plays, I look for zones, not just an actual area. So using what I just highlighted, I'm making this a different color so it stands out a bit. This entire cayenne color zone should hold as support if we pull back on Netflix. Also using the trends for higher lows. There's a lot to use into your indication if you want to buy. This can go either way, upside or downside, so you have to play it very carefully. Let me do ADBD just because it's now on my list, and we can look at that real quick. And Ange, we'll go over your question with AI at the end if that works for you. Let me go over this real quick. Oh, this is yeah, Adobe. That's what I figured. I'm gonna go with the 4-hour just so people can see the bigger picture with this. We have charted this before. We're at a support right now. We must have looked at this last week. So Adobe's still at the main support. I told you guys about the, 475 area, 470. We have to hold a support, and the main gap fill on a breakout is around $530 a share. I'm going to take this down to the 30-minute for the current consolidation we're in. We have to hold this support. There's not much to say about Adobe since we have pushed massive in the last 2 to 3 months, and we're slowly approaching the breakout. If we can hold support at roughly 475, pullbacks to that area should be good, but you also have to take into consideration a lot of resistance on the way up between $490 and $495 a share. A lot of wicks will be touched. If we can break out, just like every stock I talk about, I love to catch pullbacks. Not saying there's a pullback every time, but a resistance to support flip is one of my go-tos for almost every stock that I play. If we break out of that 495, I would not be surprised if we hit 430 within a week or two after that breakout. Rally base, rally potential or drop. Is the rally, you talking about for Adobe, Mr. Trades, for the rally, upside or downside? Going off the consolidation, the main thing that I'm seeing from like a very pinpoint visual, like what I look at with stuff, we are slowly making lower highs. But the issue with taking that into consideration, every dip is getting bought up. So we're kind of starting to squeeze on price action right now. The issue for me with Adobe, tech is extremely, I don't want to say overpriced, but compared to most sectors, it is extremely high up. Microsoft, Google, NVIDIA, tech sector is extremely volatile, I would say. So if that could continue, Adobe has momentum to push. My biggest thing I would look for, don't let a fake drop think we're going to have a sell-off. Yes, we could, but that will lower the risk and make your reward higher if we do hold support on those pullbacks. Overall, from a larger perspective, I do think Adobe has a potential rally that's still brewing. We have not had a sell-off, and I feel like within the past, well, it's been almost 2.5, 3 weeks, we should have sold off by now if it was going to happen. Every time we've consolidated before the breakout, after the breakout, not any of this mumbo jumbo back here. After the breakout, every pullback is bought up and shows strength. So if we can hold that 475, 470 a share, I do see a rally with Adobe on the horizon. I'm not saying a week, 2 weeks, but if we break 495 area, this will push to 500 pretty quick, if not 530. Question: for moves like FOMC, CPI, where SPY contracts get juiced up, would it be best to buy before they get juiced if the account can't handle the move indefinitely staying out? Just wondering. So, CJ, the biggest thing that I tell people, when you notice contracts are juiced, why do you want to have another way around them? Like, are you going to play farther out just to make it work? For me, I don't try and get in before the juice happens, because a lot of the time contracts get juiced for a purpose. When the move happens, the contracts die off insanely quick because the IV gets reduced once the news release happens. They juice them for the news gets released, whether good or bad. You can't make profit like it normally is when they're not juiced. Even though the move is the same, 50 points upside for a non-news release or the news release for FOMC, the percent gains are not going to be the same. So if the move does happen, you're still not going to hit as big as you would when there's no FOMC or CPI. So for me personally, I don't try and buy in before it. I watch the week of and see how the premiums move leading up into it, and I play after the results. So after CPI Wednesday morning, that's when I'll look for a long on SPX or SPY. I will not look for that Monday or Tuesday. I will only be scalping, because knowing the juice is in the premiums, I don't want to put my risk in that position, if that makes sense. So let me slowly scroll down here. What else we got coming up? Come on, let me zoom. There we go. Disney, Nike, SPX, Roblox. I'm going to show you guys Roblox real quick. I know we got 20 minutes left, but Roblox is looking like something major may happen pretty soon. And it is a cheap stock. I know a lot of you guys do have smaller account portfolio sizes. So I want you to see the move that could happen. When we looked at this about 2 to 3 weeks ago, I wanted to see a pullback to roughly $35 a share, and we're still holding, making higher lows now. Going off the bigger picture, I want you guys to see this lower high, higher low forming. This is the same setup as Ford that we played about 2 months ago when I would chart this for you guys. I was hoping to get this pullback to this cayenne color highlight, this baby blue. Never happened. This was the entry for my calls going long. We're still holding above support, but also rejecting this resistance. Going down to the 30-minute now. Roblox is showing strength. And give me 1 second, guys. Let me delete these other lines just so I don't distract anyone. Roblox is showing higher lows on trends. Last time we had this, though, we did have a major drop off. So I'm not anticipating we're going to break out this week with Roblox, but I'm eyeing this very, very closely. And the only reason I am eyeing this, going back out to the 1 hour now, if we break out of this highlight, I honestly expect a break and a recontest for what I want as an entry, right on the second arrow. We've rejected $44, $42, $43 multiple times. We're slowly rising in price action for higher lows. We're squeezing on the smaller frames. If we do break out of Roblox, I'm not looking at a $45 gap fill, $50 gap fill. This is what I see happening. And if you guys remember what Ford did, this move will not seem like, holy crap, you're crazy for thinking this. I honestly think $60 is coming on Roblox. Not saying in a week, not saying 2 weeks, but a month to 2 months out, this move is possible. The main level we have to break on the larger picture breakout is $52, which was the double top before this lower highs and higher lows started to form. If we break 52, we will send the 60 plus. Going off the 1 hour again, realize that 52 is a major push going off what we have historically for the first level at roughly 46. So if we break that $42, $43 level, I do expect 46, 47 to hit. If 47 breaks, we have 52. 52 break will lead us to 60 plus, in my personal opinion. So I'm going to keep scrolling down. I see you, Ange, with JP Morgan. Don't worry. Slowly working down. Here's Tesla. Let's look at Tesla real quick, guys. Oh, wait, no, that's not Tesla. My bad, my bad. There's Tesla. Okay, let's look at Tesla real quick. Tesla's still in the same formation. I don't have much to say about this because I know Rippy God does talk about this and trades it very often. But just going off the same levels as last week, we had the gap push to the upside after this consolidation, this quick sell-off, which buyers kept up. We are rejecting that 280 a share area. If we break above 280, 297 area, and 310 will be in the picture, you also have to realize Tesla is volatile. Everyone knows that. Price is high. Contracts are expensive. They move very quick. Focus on the bigger picture for Tesla. Where could this lead to if we break out? Every time Tesla has momentum, it has that massive move with continuation day after day. Don't try and catch a breakout for a day of scalp. I recommend looking for a nice support pullback. Use that to your advantage and buy time and let the play work out. Tesla can easily move $40, $50 in a week, if not 2 weeks. So you have time to let a play work out. And if we do break that 280 a share, we should easily fill the gap to roughly $300. If we hit 300, watch that 312 to 310 area, 310 to 312. Breaking out of that, as you guys can already tell, massive fill up to 350. Not saying it will happen that quick, but I love looking at the bigger picture for Tesla because the momentum carries it. This isn't a stock that moves based off buyers or sellers. One direction, it will move. There's no, oh, sellers are coming in. It's just a pullback for Tesla half the time. So always focus on the upside until electric vehicles and that sector start to come down with an overall market idea, not just Tesla alone. No type of bad news should pull this back only because Tesla is so strong right now. So let me scroll down. There's JP Morgan. Okay. Let's go out to the 4 hour, let's go to the daily actually. I kind of want to see why I have this yellow highlight here. We're at a rejection zone currently. Yeah, I saw the Mercedes with what was it, about 10,000 vehicles, 14,000 vehicles will be using their charging ports. I did see that. Someone talked about that and released the article. I'm not sure. It may have been you, David, but I know someone released that in the Rippy Global chat. That could have a nice push for Tesla and also charging sector stocks, which would be Blink, Plug, and a few other ones. So looking at JP Morgan, Ange, we talked about this a few weeks ago. I was telling you about that 145, 146 area. We're currently there right now. At this point, everyone knows how I am. Pullback, which we had a slight retraction, roughly 143, maybe 142 area for a nice support. Banks have been hot. But with these liquidity grabs for support historically now acting as a resistance, can we break above and how long will that take? Focus on that 143 area as a support. If we can break above that 147, 146 area, we should fill the gap, which I told you guys about, 157. Not saying it will happen in a week, 2 weeks. This is a month out possible reaction to a resistance break on the upside. We are squeezing on JP Morgan, if you guys can't tell. Price action is rising. Dips are getting eaten up every single time. Higher highs are slowly starting to form. And we're going to be hitting all of this consolidation that happened back in 2021 when it was at all-time highs. I have to draw this trend line just because of how good it looks. Focus on the fact of the rejection being roughly 145, 146, 147 area. Trends are holding. Every pullback gets eaten up for a higher low. So this will squeeze eventually. I do see roughly 157 coming on JP Morgan. I want to say before September. I don't want to say August. I don't want to say in July, but this is showing signs of a potential rally to the upside with a 10-point push coming at some point. On a bull market, market tends to ignore bad news, and on good news, it goes up further. So news is always neck and neck. It doesn't always like good news push, bad news down, bad news up, good news down. It's all based off like technical analysis. A lot of stuff is priced in. A lot of news is already heard about from people that know about it before retail ever gets it. A lot of this stuff is priced in. So news can't really be incorporated into the market unless it's like a major, major reaction that affects everything and not just one individual price. A lot of stuff like when the chip sector came out with like China's going to stop importing, everything pulled back, but it went right back up. A lot of stuff is a scare to get retail out just for the big boys to buy in more shares on that quote unquote scare off with the news release. So I personally don't look at news that way, but you do want to take into consideration where are the main zones that could hold on a news scare or a news push. There's always that kind of stuff to look at because bad earnings on an earnings release for a stock, it can go up. Good earnings can always go down and vice versa. So you never want to use news as your only like bias as to what you're going to make happen with calls or puts. Use it as consideration. Don't let that fool you into thinking, oh, good news, the stock's going to skyrocket, because a lot of the time good news comes out to get people to buy just so others can sell their shares to them and get out before the sell-off does occur for certain stuff. Amazon with Prime Day next week could break out of the 135, but with SPY inverted hammer down Friday, what are your thoughts? So Prime Day, yes, I've been hearing about this. I am very skeptical on the overall market this week only because of CPI. Not saying we're going to sell off, but let me just switch over to SPY right now, actually. The only reason I'm so skeptical, and I'm going to delete every line I have just to show you guys a better visual picture. I'm going to take this down to the 4 hour. If you guys didn't realize on Friday, we had a major push with a major sell-off. Same day, huge momentum push. I don't see why we have strength to keep going higher outside of a fake wick to the upside, breaking 443 and then coming right back down. I do think we have a retraction coming in very shortly. I don't know if CPI will affect that. I do understand banks, hedge funds, Wall Street, they already know what's priced in. They know what's going to happen this Wednesday. They're already in preparation for it, and we're waiting for that news release as retail to take that into consideration. I do think we have a retraction coming, a slight relief before the next leg does happen. Lower highs are going to happen on the smaller frames. Personally, that's what I think. But we're also on the larger frame going to keep these higher lows forming. I don't think we're going to have a massive sell-off like 410 is coming on SPY, but I do think we do have a slight pullback this week due to results that we may not be prepared for as an economy outside of just money going into the market. Amazon having Prime Day, taking that into consideration, Amazon has been running opposite of SPY a few days. So I don't think SPY coming down will have Amazon going down as well, even if Prime Day has massive results. I am very bullish on Amazon as a company, and I will pull up that stock right now just to show you why I am. And this is all about smaller time frames for Amazon. I watch this every day. I have a lot of people I help one-on-one that also watch Amazon very closely. We are looking at the same zone that we were in as a resistance, which is now a support. Amazon has a massive gap to 135, and if that breaks out, I would not be surprised if we hit 140 plus on Amazon. The reason I feel that way, going back to the 4 hour, we still have a gap to fill. Historical support, which now we act as resistance since we can't break above, we're still trying to fill that gap. And every pullback we have on the smaller time frame, Amazon is holding these zones. That 127.5 historically was a resistance. Now it's acting as a support. Until we break 127.5, yes, we have a massive support at 124 share, but this is just going to keep moving to the upside, just like Meta, just like Microsoft, just like Apple has been doing as well. Even if SPY pulls back, I still can imagine Amazon having strength to go to the upside. I don't think the overall market is going to have an effect on Amazon. If SPY drops 2% in a day, Amazon's not going to be a bearish setup for me until 124 or 123 break and hold on the downside. Prime Day is going to be a huge market sentiment for that specific stock. It also could affect shop and other e-commerce as well. So using that into consideration, I'm only focused on price action for Amazon this week. Yes, I understand CPI. Yes, I understand SPY's overextended and a pullback is natural, but Amazon has been running green when SPY is red. When SPY is green, Amazon is sometimes red. It's doing its own thing right now. So I try not to correlate the two until I see the correlation with SPY and Amazon hand in hand. So I'm going to pull up Meta now, and we got about 6 minutes left until the close time of the class. So if you guys have any other stocks, I see Elson said Google. I don't think I missed anything else from above. I know SPX you guys want to see. I pulled up Netflix already. Meta I'm about to go over right now. Square, I will pull up Square, David. I see your Square thing now. I'll go over ES. I'll do ES instead of SPX because I know Rippy God, aka Hassan, is going to put out levels for his SPX plays. So I'll do ES instead. I like that idea a lot better. So going off of Meta, and then I'll do SQ right after. And yeah, he did say that again, so that's perfect. So on the daily chart for Meta, I'm gonna remove these drawings again. We filled the main gap to $300 a share. Just like I was saying with other stocks that are filling the gaps to the upside, Netflix being one of them, Amazon as well. Meta has hit that gap fill from the earnings sell-off that happened back in beginning of 2022. Knowing that, if tech stays hot, if the QQQ says hot, if communication sector stays hot, can Meta still make a run to the upside? Taking this down to the 4-hour now. The biggest thing I like to talk about with people, what happens after a gap fill? Is there a retraction? Is there selling pressure? Understanding how volume works and knowing what's coming up in historical price action for current movements will play a huge effect. Understanding we filled the gap from after hours close, not looking at the 4-hour because we see we had a push then sell off. Just the sell off from this low, we have filled the gap on the day of before earnings, the day before. Knowing that, we're right at that level. Going off trends, Meta is continuing higher lows, continuing higher highs. Until this setup is invalid, you have to play trends. You can't go against trends on a stock like this. There's no telling how much higher this can go now that the gap is filled. At this point, just like Microsoft, just like NVIDIA, we can move based off volume. We can move based off buying pressure. We have many levels that we can put. So if you want to put one on Meta, we can look at roughly that $305 share area. If we push up, it's only about a $15 push from close on Friday. If we break 305, a lot of consolidation in between, a lot of ups, a lot of downs, a lot of ups, a lot of downs. So you can't pinpoint where those levels going up are unless we take it down to the 30-minute and go back in time. But just focused on current price action for Meta, I always tell people, don't fight trends. You can't go against what the chart is presenting. You can't go against communication sectors hot. Consumer discrete is hot. QQQ is hot. You have to follow what the market gives. So using the smaller time frames in this current price action momentum, we can get our own levels formed based off the chart and what it's been looking like. So the main levels that I like to look at are roughly a heavy support. If we do sell off on Meta, it's going to pull out of the trends, but it's going to hold as support if we pull back is roughly $279 a share. If we can not break that low, focus on that 290, that 289 area. That was a massive resistance before the breakout on Meta right here. Resistance flip to support. Always focus on that in current conditions. Don't let the idea of Meta having a massive drop off is going to affect the stock. We had threads come out. I understand they had like, what was it? 10 million signups, 50 million signups in the first day or whatever the number was. That shows positive news. Is that going to push the stock enough when there's already that type of content on Twitter, on other social media platforms? The outcome was amazing for the signups, but is that enough to keep this stock moving? Is there more in the arsenal of Meta that could keep momentum rolling? A quick sell-off on this for a selling and a dip buy should not scare anybody, only because the potential and the trends are still strong on this stock. Yeah, Ange said Meta needs a pullback, a healthy pullback. A lot of people, and I'm not saying Ange is referring to this, but a lot of people, when they say, like, when they see, like in this specific day when Meta dropped, was almost 15 points, people were probably freaking out. Oh, Meta's coming down. It was literally a dip back to support to buy in again. Opportunities arise when people are fearful. That's how you have to look at it. So if Meta has that like healthy pullback, retraction, whatever you want to call it, focus on the levels below that historically have held. There's no such thing as, oh, trends have broke. Trends can break, and if they do, they could come back into focus. So understand what's happening on the bigger picture and not just look at the 5 minute and say, oh my gosh, Meta's looking so bearish compared to the high that happened 2 days ago. Okay, yes, we understand that, but knowing the support underneath, that should give you conviction to wait for the move to show you a direction and play off of it. Don't just enter and say, oh, we have to keep going upside. Let the chart give you more indication as to what could happen. Use that to your advantage. Meta is still strong. Communication sector is still strong. Don't go against strength until given a reason to go against it. Let's see. Nice breakdown spy on Amazon. Thank you. Yeah, you're welcome, Randy. Anytime. Anything else you need, just let me know. Even outside of the classes, DM me anytime. I know someone mentioned XOM. Before I get into SQ, David, don't worry, I'm going to get to it. I'm actually going to end on SQ and ES. Someone mentioned XOM to me earlier, so I do want to talk about this very briefly. Energy sector has been hot, and I've been talking to you guys about this 101 area for dip buys as support. People have to understand energy has been hot, but will it have a slight retraction? The larger frame, we have a straight zone from 101 a share to a high of 108 a share. Until we break out of this, it's going to be straight down, up, down, up. If we break 101 a share, there's a lot of room to go back down. Yes, I understand we have that $98 a share grab we had earlier back in March of 2023, but there's a lot of room to the downside where people may want to buy this at $85 to $90 a share. If energy stays hot, the support zone holding right now at 101 will be the zone to buy calls. If we don't break on the upside, I do see a slight retraction for energy as a whole. ExxonMobil is obviously like hovering at all-time highs. Can it go even higher? It can, but what conditions will make that happen? Will the people selling out of technology sector flooding the energy? You have to understand sector rotation and what's the potential next boom in the sectors. So until we see tech flood off, it's hard to really put other sectors into the picture, not knowing if the strength is there for it. So ExxonMobil right now, I would say I am indecisive. Logically, on the smaller picture, if I go to the 30-minute, ExxonMobil is right at a support zone for a curl. And every time we have this pullback, we start to form a trend to the upside. If you guys can't tell that now, this may be the fourth time we have higher lows based off the smaller time frames. Indecisive in the middle. There's a lot of up and down. Main gap fill, if we bounce here at 101, will be a $108 a share fill on the resistance. So I'm going to pull up SQ. Also block. I think I said square earlier, so I apologize if that offended anybody. So financial sector, payment processing app. Going off, I'm going to switch to the daily because I've not looked at block in a while. Before the major breakout last time in 2020, we're at the same consolidation area, same support, almost same rejections on resistance. So everything's looking strong if we can hold on these zones. I'm going to go back to the 2 hour because I can't see this whole zone. There we go. So looking at block, biggest thing I think you guys are realizing, we're making higher lows. I'm very big on trends. I don't play off trends, but I use it for confirmation on a shorter term, shorter time frame. Block is looking bullish. Overall, we have a lot of resistance in the way if we do push. A lot of wick fills right here, around $74 a share. And the first fills that we have to get through, and I'm going to put a line here instead, is around that $70 a share. Block is slowly making headway. And I'm going to break this down to the 30-minute now. Block is slowly making higher highs, if you guys can't tell, in the current smaller time frames. If we go back, we had this curl. It's trying to get that rotation going. Pull back on a bearish setup, only to flip bullish after we found a nice support at roughly $55 a share. Knowing that and knowing the historical idea of this consolidation before the major breakout in 2020, block could be on its way for a push up to $75 a share. Along the way, we have $70 as a resistance. And even outside of that, we have to understand where a pullback is going to be a massive buying opportunity if we have a slight retraction on square. Going off the dip buys we've had, historical rejections, which is now going to act as support, around $63 to $64 will be a dip buy opportunity if you missed it this past week. Also understand, just because we pull back doesn't mean we have to bounce. We have a trend of higher lows. We have a support at roughly $63 to $64 a share, and we're making higher highs on the upside. We can't let that distract us from the bigger picture. There's a lot of resistance that has to break for this to make a move to the upside. So understanding the bigger picture will play a big part in this, but if finance stays hot, using other sectors, banking systems, whatever it may be for whoever trades this or what you look at, strength is there on the smaller time frames, but on the larger, there is a lot of rejections along the way for this to just push and break on the upside. And I'll answer that question about funded accounts in a second. I got you, Moon. Let me pull up ES, and this will be the last thing that we look at. I do want to clear all my stuff I have just to make this more open, I would say. So since we already talked about SPY, it's going to be the same idea of what I had. So I'm only going to focus on the current times, and I'll basically try and explain what I think will happen this week. Since the bigger picture, you guys understand, I think we have a pullback coming. I don't want to get into like heavy details of a system and like terminology words that I use with the FVGs and the compression, decompression, all that crap. But the main thing I want you guys to realize, we're staying in the zone right now. Rejections are hitting the same. Pullbacks on support are holding based off historical rejections. Resistance flips, hold as support, resistance, resistance, resistance. Now we're holding this support. If we do sell off, switching to the 2-hour, you have to understand how the wicks and the bars fill will play into effect. 4,400 on ES will be a massive level. Don't use these levels for SPX, please, because they're not the same. If you guys don't know that, don't do it. SPX right now is under 4,400. ES is at 4,430. I am a bit delayed. I don't have the full version so I can see in real time, but we're not at 4,400 on ES. If we catch a pullback, I do expect us to use 4,400 as a retraction and a possible bounce to the upside. Focus on the same thing I said earlier. Support will flip to resistance if we break on the downside. Vice versa, if resistance breaks on the upside, that will now act as support. Understanding that and how it could affect the market and ES overnight with the London session, the Asia markets, Asian market, and then of course pre-market at 4 a.m. Eastern. A sell-off tonight does seem logical, but holding it and making it chop will take out future traders to make sure they don't have enough funds for the rest of the week. They think in a very manipulative way, and I like to keep it simple and on the larger time frames. I don't want to chart on the 5-minute, the 1 hour, well, not even the 1 hour, but like the 30-minute. I want to see the bigger picture and catch the pullbacks that happen. We have zones to look at. We understand we have the compression. We're currently in that zone right now. Focus on the fact that bouncing and chopping is going to be normal until we break out on the downside below about 44.20 on ES. And until we break below 44.20, 4,400 will be the go-to before we push back to the upside, about a 30-point drop on the futures. Does anyone else have any more questions, comments about stocks? If not, I'm going to end the recording. We can chop it up with other questions like what Anch was talking about a few seconds ago. Yeah, you're welcome, Lance. Anytime, anytime. Any last minute stocks? I'll take one more if you guys want to say something. But I want to see a few people say a stock. I just want to see one person. If not, we can end it here and we can just chop it up for a few seconds. SPX, I'm going to leave to Rippy God. So I apologize for not doing that. Just literally the same thing. Like if you want to take a screenshot of my ES futures, take these levels and just correlate them onto the SPX chart. Same thing will correlate. The levels are exactly the same. It's just different numbers. So yeah, let me just pause the recording.